Did you know that historically, September is one of the worst months for the most famous cryptocurrency in the world? But don't worry, there is light at the end of the tunnel, and that light is called Uptober. Bitcoin drops in September. But October could change everything. Historically, Bitcoin has struggled in September, coinciding with what is known as the September effect in the US stock market. This phenomenon has impacted both cryptocurrencies and traditional assets, causing concerns among investors each year. Since 1929, the S&P 500 has seen declines in September 55% of the time, making it the most negative month for the stock market. This downward trend has created uncertainty among investors, making it notoriously volatile and difficult to predict each year. This phenomenon is partly attributed to traders adjusting their activities based on vacation schedules, while financial companies are also affected by their fiscal calendars. These two factors play a significant role in the market's volatility during this time. Although Bitcoin's history is shorter and more recent, it has shown similar weakness during September, the first month of fall. Like traditional markets, this cryptocurrency tends to struggle during this period, creating uncertainty among investors. Since 2013, Bitcoin's price has dropped 8 times in September, starting the month with an average decline of 8%. This recurring trend has led many investors to brace themselves for a tough month each year, anticipating potential losses. Since 2013, only 2 months have shown average losses for Bitcoin, September and June, with September being the worst of the two. This negative pattern has made September an especially tough month for cryptocurrency investors, who typically see more declines than gains. Jake Ostrovskis from Wintermute claims that the negative trend in September isn't set in stone. He says that while September is often challenging for Bitcoin, other factors are much more influential in determining the cryptocurrency's price. Factors such as liquidity trends, macroeconomic conditions, and overall cryptocurrency market sentiment are more relevant than the negative trend in September. These indicators provide a more comprehensive view of what truly impacts Bitcoin's price. Zach Pandel from Grayscale points out that outliers, such as the extreme gains in November 2013, can impact monthly averages. These unusual events can significantly skew the statistics and provide a distorted picture of overall trends. Pandel expects investors to focus more on fundamental factors, such as Federal Reserve rate cuts and increased institutional adoption, rather than solely on the September effect. These elements could be more decisive for the market's future. The September effect is seen as a minor anomaly with limited relevance, as it contradicts the efficient market hypothesis. This theory suggests that asset prices reflect all available information, making seasonal patterns less significant. Often, Bitcoin's losses in September have been followed by gains in October and November. The term Uptober gained popularity in 2021 to describe these positive rebounds that typically occur after September's declines. So is all this the end or the calm before the storm? The future of Bitcoin could surprise you this October. Don't forget to like the video if you enjoyed it, share, and subscribe for more news and tips on economics and finance.